This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.
Finance ministers and heads of international financial organizations are gathered in Washington, D.C. for the 2025 World Bank IMF spring meetings to discuss ways of navigating the current global economic challenges. The meetings will discuss a range of topics, including the fallout of the ongoing tariffs that have affected international trade and negatively impacted the global oil market. Joining the conversation this morning is Marcel Okeke, an economist. Mr. Okeke, good morning. Thank you for joining us on the conversation.
Okay, thank you for having me on the program, and good morning to you all.
Always a pleasure. So, Mr. Okeke, let's start from home. The IMF forecasts a 3% GDP growth for Nigeria this year, which is a drop from last year's figures, which was 3.4%. Can you share your thoughts about this with us?
Well, yes, to a very large extent, I would say that is expected, and it could even go worse, than that, at the 3% that they are projecting, because the only thing that is now certain within the Nigerian economy and even globally is uncertainty as far as the economy is concerned, because the ripple effect of the ongoing tariff war are yet unfolding, they are yet unfolding, the ramifications, the implications are yet unfolding. And for Nigeria in particular, since the tariff war is already affecting the price of oil, our economy to a very large extent, depends on what happens to oil export. And so nobody even knows how far, the drop in oil price will go as we speak. The 2025 budget is benchmarked on $75 per barrel, and we're already talking about something in the region of $55 to $60 per barrel, and it could still go below that, among other things that are happening. So at the end of the day, nobody's sure, what will be the state of the economy at the end of the year and in fact going forward. So the IMF is right. Thank you.
And you're not wrong there, Mr. Okeke. As we understand it, the forecast they've done, not just for Nigeria, but for the world, is based on the U.S. pausing its retaliatory tariffs. This was as of, I think, April 4th. It doesn't take into account the 9-month window if the U.S. decides to actually implement those retaliatory tariffs. Now, it does beg the question, 2026, we're forecast for a 2.7% growth. That's a depreciation. The same 2026, the IMF is saying that they expect to see 37% inflation in Nigeria. Do you think that these forecasts also counter some of the policies that the IMF itself has backed that are being implemented in the country?
Well, the policies the IMF seem to be hailing, that were being implemented in the country, yes, was for a particular time, but since the inauguration of the current president of the U.S., Donald Trump, I think on January 2025, a lot of things have started changing, rapidly changing in the whole world, okay, because of the tariff war he initiated, among other policies, especially executive orders, has been turning out, affecting a lot of things. And he's doing whatever he did is anti-globalization. So he's talking about is it exclusionism now, or what we call nationalism? Like he said, make America great again. So every effort and emphasis is on, in quotes, the greatness of the U.S. No matter what happens to other nations. So that goes counter to what has been driving the whole world before his arrival, so to speak. And so that is why whatever the IMF was saying, maybe by last year or maybe by January this year, the situations are no longer tenable in the face of, the unfolding realities arising from Trump policy. So that's why it is the way it is for now. Thank you.
So, Mr. Okeke, what sort of steps do you expect from fiscal and monetary authorities in Nigeria to course correct and avoid these forecasts?
A lot of things are purview. A lot of developments are beyond the purview of the monetary and the fiscal authorities. Look at this while we are talking about drop in the price of oil. What can the Nigerian authorities do, to stem that? There's nothing they can do. It's a global issue. Or the impact of the tariff war in terms of the price of imports, going up. What can they do? They cannot do anything to influence, and so on and so forth. So because of that, they would rather, like they are attending the meeting you mentioned, they would rather see what is happening on the global scene, you understand, to know how they will now fit into it and begin to, rearrange the variables applied in budgeting and public finance management generally. You understand? So a lot of things are beyond their control, and they just have to flow. Thank you.
Mr. Okeke, thank you so much for your time and your expertise on this conversation. We appreciate it. Mr. Marcel Okeke is an economist, former chief economist at Zenith Bank, joining us to discuss forecasts by the IMF. The World Bank IMF spring meetings are currently underway in the United States of America, where a Nigerian delegation is also attending, including high-ranking members of the Central Bank of Nigeria. Latest forecasts say Nigeria's economy is expected to contract actually this year to 3.0%. Last year, we recorded a 3.4% growth. By 2026, the expectations are that we will see the economy contract even more, to 2.7%, where a 37% inflation rate is expected.
This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.